Okay, welcome back to the channel, MegaWhale team. Thanks for tuning in. If you're new here, consider liking the video, commenting down below, and subscribing to the channel. We're going to get stuck into the video today. We're going to be taking a look at Bitcoin. We're going to be taking a look at the macro, and we've got a lot of information that is relatively new, and I don't think a lot of people have talked about, and it could be potentially, I guess, the golden key in uncovering whether or not we're going to be entering a bull market here or going down further into this bear market. And we're going to be identifying a couple of things today. First and foremost, I did want to start and pointing out by saying we are in this symmetrical triangle formation. So this symmetrical triangle has basically been continuing since about the 27th of December, and we had our point A at this point here, point B, C, D, and obviously we're pushing and consolidating with these higher lows and lower highs. We have a few things I do want to point out on the chart before we do continue, and of course this is these two grey boxes. At the moment, this is our major resistance zone. This is basically a resistance zone that is going to flip us into a bull market if we are able to get above that zone, and it is also acting as a pretty strong resistance. We've seen numerous occasions of very strong rejections from the zone in the last 2 months. Vice versa, this trend line here is basically our last leg of support. We do have a small support zone, which we had a lot of consolidation in the last few days at around 39,350 to 38,800. We do have, like I said, this trend line, which is kind of our last leg to stand on. If we lose that trend line, we're going down to 35K. Now, I do just want to say the FOMC, FOMC, for you guys who didn't get that one, meeting is happening, I think 9 to 10 hours. And of course, if we get bearish news, guys, the entire market is going to crash, and I will not be surprised if we see a big candle down to 35K. In saying that, we're going to be taking an objective point of view and objective look on the market today. We're not going to worry about potential news. We're just going to be worrying about what the data is saying and just going over the analysis and the technicals. So yes, the news can have an impact. Yes, I've talked about the impact many times. Today, we're not going to worry about it. We're going to pretend it doesn't exist and go over the technicals and try to give you a prediction based on the technicals alone of where we think the price is heading. So first and foremost, if we do break this descending trend line here, we had a retest again today with a strong rejection. If we are able to break this descending trend line again, there's a very high chance of pushing up into this range for our first target. All right, we mentioned this is our range over here. Either we get rejected heavily from here or we push upwards. Now, if we push upwards and retest for support, that is when I will be flipping bullish long-term again. So macro bullish, was I do believe that will push us up to 50K. All right, that is kind of what I'm going for today. We're pushing up, we're flipping this as support, and we're pushing higher. At this flip, at this resistance support flip right here, RS flip, at this resistance support flip, that is when I'll be starting to trade with larger volumes of cash. I believe the market is in an overall uptrend at that point, and I've always mentioned to you guys, you should trade the trend, and trading with the trend is always going to be better than trading against it. Currently, we're still in a downtrend. All right, we've had a lot of volatility in the last 2 days. If we get into an uptrend, it's going to be a lot easier to catch trades. It'll be a lot safer. You can apply a little bit more risk and make some more profit. So that's about it, guys. Let's dive right into the technicals, and we've got a few things we want to go over. And first and foremost, the Bollinger Bands. We are seeing a zone of compression. And if you've watched my video on how to trade Bollinger Bands, you would know that we can actually identify this in 2 lots. We have our volatility phase and our compression phase. And usually what happens directly, this is quite expanded. Remember, this is over a period of about a year right now. So it's quite a large analysis on the Bollinger Bands. We have a lot of volatility with large peaks and troughs, all right, big wide gaps in the Bollinger Band spans. Directly after, we have a period of sideways consolidation, which we're seeing here. And usually if we push up out, it is going to basically indicate we're going to see an explosive move in a direction. Now, the direction that we move explosively is determined upon the direction we break at either the upper or lower band of the Bollinger Band, meaning that if the price continues upwards and we break over $44,000, the Bollinger Band is going to confirm a strong move and a continued move upwards to $50,000. Vice versa, if we come on down and we reject and we lose that uptrending Bollinger Band, right, which will happen if we lose this trend line, it's going to confirm an explosive move down, and that could easily propel us down to 30K. At the moment, the Bollinger Band is looking more bullish than bearish. We did have that midline cross, so you see the golden line in the middle. We crossed that midline, indicating we've got some momentum pushing upwards here. There's a good chance we're going to go back up and retest at top of that Bollinger Band. Moving on, we're going to be taking a look at the Gaussian Channel. I know a lot of people probably don't use the Gaussian Channel, or many of you probably haven't seen the Gaussian Channel, but the Gaussian Channel is my favorite indicator for predicting macro trends. And I use the Gaussian Channel basically many times. I used it to predict a drop in May. I actually predicted that this entire drop here, this entire drop to the T, I predicted $28,000, and I was able to predict it when I saw this drop into the Bollinger Bands on the 14th, the 15th or 16th of April. That is when I predicted, right? We crashed back into the Bollinger Bands after finding support on it for months and months. The price is going to continue to the downside and lose, right? We saw that happen. We saw exactly the same thing happen here. I said exactly the same thing, guys. 16th of November, I told you guys, we lose that Bollinger Band. We're going to go through the Bollinger Band and we're going to crash below it. We're seeing it happen again. Now, everything in charting is inverted. If you think about this here, losing the top end results in a push downwards. If you flip it and you lose the bottom end, it results in a push upwards. Everything in charting and technical analysis can be applied on the inverse. I know a lot of people don't look like that because people are psychologically programmed to think green good, red bad. And I know a lot of people change their chart colors to neutral. I personally, it doesn't affect me. I'm able to kind of look past that because I look at the data. But if this is something you're struggling with, sometimes inverting the chart will help. What we are seeing here is we're seeing a gradual push into the Gaussian Channel, and we're occupying more and more volume in that Gaussian Channel. We noticed beforehand we kind of sloped downwards throughout the Gaussian Channel, not really pushing in, but when we did push in, we pushed upwards. What this is telling me, it's telling me again, there's a lot of compression, a lot of volatility happening, especially with these wicks. We can eliminate these, we'd pretty much be at the bottom of this channel the entire time. But it is telling me a strong move is coming. The direction will be determined upon the break of the symmetrical triangle, but it is telling me either a strong move is coming to the upside and we're going to flip this entire Gaussian Channel. Again, this channel trend line will line up with the Bollinger Band upper band. It will also line up with the resistance zone. So it lines up with a few places. So either we're going to flip all of that and continue bullish, or we're going to get rejected and continue down heavily. So guys, a lot of really important information. What we're going to do now is we're going to jump onto the 1 week chart, and you can see, guys, I'm not even going to make this up. You can see that we are finding some support here. Again, the Bollinger Band acting as a little bit of support, and we can see the support zone more clearly on this 1 week, this little support block we have over here, obviously retesting this high in January, and we've kind of held that zone here again and pushed back over, another bullish indicator. So what we're going to move on to next is the Ichimoku Cloud. I want to start on the weekly for Ichimoku Cloud, because of course Ichimoku Cloud, again, just like the Gaussian Channel, is phenomenal at predicting long-term trends and momentum. And again, what we can see here, we can see a few things. I do want to actually change the lagging span to black. And what we can see, a few things over here. First and foremost, the most notable thing is we have crossed our conversion line. For those of you who don't know what the conversion line is that blue line. Now you can watch my Learn to Trade video on how to trade conversion lines and how to trade Ichimoku Cloud based on this. And it's going to give you a little bit more of a insight on what this actually means. We do have a lot of support down here again, and it's not a coincidence that this bottom of this cloud lines up perfectly with this uptrending line, indicating again, this uptrending line is a very strong support. And if we lose this uptrending line, we are going to significantly crash. I'm not even going to say it nicely. If we lose that trend line, the market is going to dump. All right, we're going to crash. We're going to crash hard. Altcoins are going to crash hard. Vice versa. We do have to keep in mind we have a lot of support. Now, we have to automatically assume we are bullish at support, bearish at resistance. And this is another reason why I am flipping a little bit more towards, like I said that in the other video, I'm optimistic. I'm cautiously optimistic. I am understanding that we are at strong support. We have a potential reversal incoming. We have a lot of compression. We have a lot of sideways action. Selling pressure is dying off. We can potentially go upwards, but I'm also understanding we are kind of on that last leg. If we lose balance here, if we lose this little support, even if the news, the negative news coming out of the interest rates is the thing that flips us under, that's all it's going to take for it to tank. So I'm waiting for his upper levels to be reclaimed before I am even thinking about going heavy back into the market. So one more thing I wanted to go with you guys today was the RSI. Now on the daily, the RSI is not looking terrible. Actually, what we'll do, we'll bring up the other one we already have. Let's bring this one up here. How do I do that? Yep, there we go. All right, cool. So the RSI is not looking too bad, guys, on a daily. Of course, the RSI can actually depict kind of what we're seeing already on the chart. We've got this upper band of resistance, and we can see that over here on the chart as well. And then we have this lower band of resistance, and we can see that on the chart as well. And the RSI is, again, kind of reflecting what we're seeing. What I do not like about the RSI here is we're having a very steep climb on that RSI, where the price is more or less a little bit sideways. It is climbing, but not quite as steep as that RSI. And again, if we do break upwards here, we can expect the crypto market and Bitcoin, of course, to go parabolic. We can expect a huge rally. Altcoins will pop off. A lot of things are very cheap. I know I say cheap is not always a good time to buy, but of course, if we have these reversals, then we can only say, yes, it's cheap in comparison to where the price will probably be in the next few weeks or months. So keeping your eye on that, of course, also keeping your eye on this lower trend line. The RSI will usually break down before the price will break this trend line. So if we see the RSI drop below this trend line and the price has yet to do that, we can actually expect that the price will follow suit eventually and drop down. It's going to be like an early warning sign. So keep an eye on that. One other thing I wanted to point out on the 3-day chart was I noticed this while looking at the market earlier, and take this very loosely. I don't think this is the most accurate bearish, should I say bullish divergence. I don't think we should be going off this alone, but I do want to point out there is actually a bullish divergence between the two values. So obviously what we have here is what we call an inverted valley, or you could call it an inverted V shape, or inverted W, inverted U, or whatever you want to call it. But we have a bullish divergence here on that inverted V shape. Now, of course, inverted V shapes are usually bearish in the sense that we do have a double top formation. We have that continuation here. We have that kind of Adam and Eve, if you may, pattern, or a double top pattern with a very clear neckline formation, of course. And we do have that divergence. So it'll be very interesting to see if this divergence actually allows that price to continue and push higher here, or if it's just going to fall through and just flip downwards, and obviously we lose these trend lines. Just something to keep an eye on. I don't reckon we should be going off that alone, definitely not. But like always, the more data you have, the more accurate you're going to be able to identify what is occurring in the charts. How well you're able to process that data will obviously result in you getting more information, and then how you apply that information will then ultimately dictate the results you get in trading. So guys, I hope you enjoyed the video today. I tried to kind of bombard you guys with a lot of information. Today's video was an information heavy, or it's like information overload, but I hope it helped, and I hope it provided some insight into this very uncertain and at the moment speculative market. I think be cautious, do not trade right now. Don't watch this video and say, oh, we're more bearish and bullish, I'm gonna buy. I think the best thing to do, guys, right now is wait for this FOMOC interest rate bullshit to get over and done with. Wait for us to flip this zone, go heavy in. If you see this trend line break and it comes back down and holds as support, sure, put a little bit of money in. Don't go balls deep, don't ape in the market. Look at what we've seen in the last few days, guys. This volatility is insane. The amount of people who would have bought, the amount of people that would have bought on these pumps, only to get absolutely dumped on, negative 10% within a few hours. Take today, for example. This candle basically dropped down in about 60 seconds. I'm talking about, a 3.71% drop in 60 seconds. For Bitcoin, that's insane, all right? So be careful, be calculated, plan out your decisions before you act, and, always have an exit strategy. With that being said, if you like the video, remember, share it around, show some support, comment down below. I always like to reply to you guys. Like, follow, subscribe, follow us on Twitter, Telegram. If you want access to VIP, join our VIP program. We give you all this information plus more, trade signals, etc., instant access, contact with me, all this extra cool, awesome stuff that you can find all the information in our free channel. And with that being said, I'll catch you in the next one.